Welcome to the 16th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore high yield shares, dividend growth strategies, and portfolio management techniques to maximize your investment returns. Subscribe now and take care of your financial future with the power of dividends. In the episode today, we'll continue to look at the portfolio that we have been building over the past few weeks and see as to how does it stand against the investment. However, before we go ahead, let's have a quick recap of the market for the week. The big news last week was that Donald Trump won the US election, which caused some kind of a celebration in the market, which is reflected in the weekly performance. So S&P 500 went up by a whopping 270.39 points, 4.72% higher. Nasdaq too went up 1066 points to end at 5.85% higher than earlier. And here locally, ASX 2 went up by 176 points to end at 8,295 points. Anyway, as I've said before, share prices will go up and down all the time. Markets will go up and down all the time. But you, as a dividend investor, should invest in stocks that have the ability to pay dividends now and in the future, and at the same time grow in value at a slow rate rather than rapidly. Anyway, to go back to our portfolio, we had initiated this investment exercise a few weeks ago, where we started creating a dividend portfolio with an allocation of 10,000 US dollars. And the first share that we had bought was KDP. We had bought 50 stocks at 37.46 for an investment of 1,873 points. Then we had bought JP Morgan Chase, 10 shares at $210.5. Then we had bought 100 shares of AT&T at 21.91. Then we had bought 30 shares of CVS Health at 60.34. And lastly, last week, we had bought 33 shares of Unilever PLC at 61.32 for a total investment of $10,002.76. Anyway, now let us look at as to how our portfolio is performing. So if I look at KDP, the current share price is 32.88 for a portfolio value of $101,644. It's lower than our investment, but we don't matter. We look at how KDP as a company is performing before the intrinsic value of the share should be good. JP Morgan Chase, on the other hand, we had bought it for 210.5, is now 236.98 for an investment of 2369. AT&T is bought at 21.91, is currently at 22.34. CVS Health, 60.34 purchase, 55.54. And Unilever PLC 61.32 and current value of 59 to give a total portfolio value of 9,861. And that's just the share price. However, during this time, since we have made the purchases, we have got dividend for KDP, we have got dividend for JP Morgan Chase, we have got dividend for AT&T, and we've got dividend for CVS Health, which is cash in hand of 71.71, which gives us a total portfolio value of 9,932.7, although a little bit lower. However, that's not a cause of worry. Our companies are strong. We will look at it in the future as to how it goes. And this is what we'll start drawing. So, last week is when our investments got completed. Our price was close to 9,850. This week, it has gone up by roughly $75 to end at 995, 99, something around those numbers. And we'll continue to plot this graph and see. And what you as a investor would see after a few months is that it will slowly, gradually start moving higher than the $10,000 line. And we expect to get more than 9 to 10% of return. And we'll track it on a week-to-week basis. Well, that's not all. There's dividends that are coming our way. So let's have a look at what dividends are coming our way. The next dividend that is due for us is Unilever PLC, which will be paying out 47.55 cents per share on 6 December 2024. We'll take that as well as it comes in and then put it back to cash and look at what is the reinvestment we could do with the $71 plus this amount that comes up. Anyway, as we come towards the end of the episode today, putting the dividend checklist again. Use this to make any investments. Doing a quick recap of the checklist. Do you understand the company's business? What is the dividend and the dividend yield for the current year? What is the average dividend for the past 5 years? What is the payout ratio for the stock? What is the price to earnings ratio? What is the price to book ratio? Does the company have year-on-year revenue growth? Does the company have year-on-year profit growth? Does the company have positive cash flow? If the answer to all of these is yes, go ahead and make an investment. If the answer to some of these is a borderline not or not a clear yes, analyze as to what the reasons are and then go for the investment. Well, that's it for the episode today. Thanks for watching and look forward to joining you for another episode of Dividend Investing Insights.